Everyone, welcome. We're excited to have you join us for a conversation today that sits at the intersection of technology, finance, and the future of mobility. Today, we're joined by leaders who are helping redefine what it means to run finance inside a technology-driven EV company. I'll let the panel introduce themselves, but we're excited to have Aditya and Will from Lucid Motors join us here on the stage. Lucid is a company that's not just building electric vehicles, but reimagining what a digital-first auto manufacturer looks like. Lucid and PwC have been leveraging AWS services to establish proof of concepts across the finance organization with solutions targeting all levels of the organization. From the board of directors and C-suites to the analysts, they're moving fast and pushing their organization to move at Sapphire speed. For those of you who aren't familiar with Sapphire speed, Sapphire is the premium level of the successful Lucid Air, and it's known for its acceleration from 0 to 60 in under 2 seconds, which I need to experience that. It's my ask. Today we're going to talk through the journey that they're on adopting AI in their finance organization. So let's just jump in. Let's start with a round of introductions. If we can start closest to me with you, Aditya, and go on down.
Sure. Thanks, and thanks for having us, and we're very excited to be here and share our experiences. My name is Aditya Baheti. I head the business finance team at Lucid, which spans across corporate finance functions, systems finance, which is where much of the agentic AI work is being done, along with other finance functions.
Hello, I'm Will Velez. I work with Aditya at Lucid, and I focus on developing our finance systems, and that's how I got involved with this project.
And you have not mentioned that you just got back from India, right?
I
think it's important.
I did get back from India last night, and I'm still recovering from my jet lag. So please excuse me if I'm a little bit slow.
So I'm Lori Driscoll. I run our PwC's tech, media, and telecom consulting business, which essentially is anything that we do with our customers from IPO readiness through to the agentic journey across a number of different functions, including finance.
And Brad Donaldson with PwC. I'm the practice leader for our finance solutions offering, which the fun part of my role is that we get to oversee all these different programs we have at different clients that are ongoing.
Awesome. Excited to have everybody with us. For the audience, my name is Adam Hood. I help lead our data and AI capability focused on AWS. Excited to be here with you today with this great audience. Aditya, I want to start with you. I think everybody's familiar with Lucid. You guys make exceptional cars that are truly in a category of one. But for our audience, do you mind sharing a little bit more about Lucid? Like share a little bit about your journey, perhaps, the new SUV, and then maybe anything you want to share about a future mid-size SUV that might be coming.
Absolutely. Well, Sapphire, as you mentioned, is less than 2 seconds from 0 to 60. If you're still in the market for a sedan, it's you can do touring and grand touring, which is less than 3 seconds. Having said that, Lucid is a software EV company, software-defined EV company, and it's been selling Lucid Air sedan since 2021, and it's rated one of the best luxury EV cars in the industry. In fact, it's received most of the accolades and the rewards and recognitions from the automotive industry. We introduced Gravity earlier this year, which has also received incredible reviews and feedback, and many more accolades and recognitions to follow through. Now what we're doing is, we're culminating all our technology and performance into a soon-to-be-available next year, introducing mid-size platform at much more affordable prices, which will unleash a whole lot of massive growth for the company. I think in addition to just developing cars, it prides itself also in developing, having competitive edge technology, not just in terms of performance, range, drive or the space, but also in terms of defining the future of mobility or transportation. By that I mean enabling or giving sort of autonomous driving cars to directly to consumers in partnership with NVIDIA that we just recently announced. Additionally, we're also doing robotaxi fleets in partnership with Nuro and Uber, which will, we've announced Bay Area to be the first launch city by the end of next year. I would also mention that every car that is sold in USA is made in USA. So it's a made in US company as well. So there's a lot of excitement at Lucid, and we're really looking forward to it.
That's fantastic. Thank you for the context. Maybe just to keep moving on, I think you talked about the growth and the scale. You talked about what you're doing here in the US, but you guys are scaling globally, right? You've taken on a lot of really important, impactful initiatives around AI, specifically within the finance. What made now the right time to dig into those initiatives and take on so many of them at once?
No, it's a good question. Why now? Of course, I think one, we're preparing ourselves for the massive growth or the growth that is going to unfold or unleash, with launch of mid-size cars. And finance organization as a function needs to scale to support that growth in a more sustainable way. So that's sort of the main driver. But in addition to that, we also have a CFO's vision transforming finance into much more of a competitive edge and provide more real-time analytics, business insights to be driving more data-based, data-driven decision-making in a very fast-paced environment and an uncertain environment, especially this year where we've experienced tariffs and trade impacts and other sort of unforeseen, unplanned events and activities.
That's fantastic. I think you've started to touch on one thing. I wanted, maybe Lori, you or Brad can jump in here, provide a perspective. I think you just started to touch on the vision that drives these decisions, especially around finance transformation and AI. Like what do you see more broadly around what's driving the impact, what's driving the excitement around AI at the intersection of finance? And then maybe we'll come back and talk about specifically how that vision is driving at Lucid.
Yeah, I think a couple of things. One, finance organizations are constantly under cost pressures like many of the other back office functions. So, you've got the responsibility of closing the books and reporting results, but at the same time, you're trying to make sure that you're a good business partner and providing decision support to the operations teams. And so when you think about that ever-evolving pressure, it's how do I start to leverage better, smarter ways to go about doing this? And also, as I'm doing it, increase the amount of insights that I'm able to provide to the business. So it's kind of that inflection point here where you can get a kind of a double win, where you can help grow scale without scaling from a headcount basis, but at the same time scale with capabilities. The other thing I would add is that, I spent a lot of time meeting with different CFOs, and it's really at a board level right now where a lot of the boards are requesting the CFOs of, how are you thinking about AI, right? There's the AI from the perspective of governance, right? When you talk about financials, and we've got, regulated numbers that are getting put out, how do we control anything that's AI driven that's going to be put inside the financial systems? And so there's the control perspective that they're looking at, but then they're also looking at how are we leveraging it to give that competitive advantage? What are the opportunities there? And so a lot of the conversations with CFOs around starting to go down that path of how do they get started? How do they embed that? What's the path going forward?
Really, really good stuff. I think, like when you and Will embark on this journey, right? Like, how did you imagine the future of finance at Lucid? Like, what drove some of those? Like, what was that process like for you? What was the vision behind it? What do you hope that looks like in the future?
Yeah, I mean, and he touched on that in terms of being a competitive edge. Finance can be a catalyst for growth. I think that's the sort of vision we have, and I think by that you break it down into sort of smaller, bite-sized tactical things, such as, the amount of data that finance sees and has access to, not just within the finance domain, but also outside of finance domain. There is a huge potential to unlock the capability of providing real-time predictive analytics, leveraging the AI tools, and there's so much value to be unlocked just having better decision-making capability. Second, I would also say the ability to adapt and adjust very quickly. We have multiple sort of ways of doing, scenario planning. With so much uncertainty, so much sort of unplanned activity, we're always trying to assess our risk profile. And multiple scenario planning gives us the ability to not only just plan, but also quantify the level of risk. And therefore, we can proactively manage those risks to be able to execute to our sort of vision and strategies. So I think that's the sort of vision that we have on the finance side, to be more of a competitive edge, but also be a catalyst for growth.
And I would add one more thing on a broader agenda. We mentioned the board. When you take a look at the Fortune 500 companies over the last 3 years, any company that has invested more than 0.5% in AI has had a 21% or more total shareholder value return. That's a phenomenal return on investment. Now, a lot of us are piloting and experimenting over the last several years. 2025, I think, has been a turning point in terms of more purposeful investments in agents and workflows that make a difference for functions like finance. But the returns are there. So we've got the proof in the pudding, and that's why boards are asking for more dollars to be spent.
Absolutely, I agree with that. And we're seeing the early results as such with the work that we've been doing with PwC and AWS.
Just that when the PwC brought this project idea to us, our first meeting with our C-suite, Tawfiq, our CFO, ended the meeting with, sometimes you have to take a leap of faith. And that's exactly what he allowed us to do. He enabled us to do. And the success that we're seeing now is powerful.
No, and I would just say, by no means I think we're experts. We're just sharing our experiences over here. So don't, I think everybody's experience can be very different. But this space is evolving at a very rapid pace. So I would say, what's relevant for us, it may not be relevant tomorrow, but we're just sharing experiences.
One thing I'll add is, when I first got involved with the team, I was looking at them, they're just breakneck speed, right? The rate at which they were going, it made me a little nervous at first. And what I found is that they're able to do that because he touched on one of the very critical points, which is they had executive alignment at the top level to go. And so we would be in meetings and there'd be a discussion of something we needed, and their CIO would be on his phone. Yep. By the time we get back to the office, there is getting access to that data set or what we're looking for. So it was really enabled the team to do that. But I think it's really critical when we talk about this story is that to do something like this, you do have to have that top-down buy-in.
Yeah, fantastic. I mean, I think everyone associates an engineering-led, kind of software-defined automaker mentality with Lucid, right? And you're describing what I would consider some of the obvious traits of an organization that describes themselves as such. Maybe you can talk just a little bit about how that culture, that identity, connects with this work. How does this vision around an agentic enabled finance team align with your broader organization strategy?
Yeah, I would say innovation is at sort of the core central theme at Lucid. You see it in the cars and being the best cars and with excellent sort of features and capabilities. It has the competitive edge. And I think from a technology standpoint, it's pushing itself, it's always pushing its boundaries in terms of now looking at the future of mobility and transportation by providing, autonomous cars directly to the consumers, not just the robo-taxis and the fleets through Uber and Nuro, but also, hands off, minds off, eyes off, kind of like a L for autonomous experience, driving experience. I think if you carry that same sort of philosophy, finance organization is sort of in the same boat in terms of pushing its boundaries, in terms of innovation and leveraging the technologies, the tools that are available to us in a more cost-efficient way. We're planning for growth, and we're investing in growth, but in a more sustainable and a more cost-efficient way.
Yeah, Brad, I would just ask, I think that culture of innovation, even within the finance organization, like not every organization has that, right? But what are we seeing more broadly? Is this a trend? Is this the start of something across finance?
I mean, Lucid's in a little bit of a unique situation in the fact that, relatively new company, tech-focused, and so the adoption was much, much higher, right? I think it's all culture specific to each company. And as we think about it and we start to go down that path to get the adoption and buy-in, there's different ways we have to think through how are we going to do that. And I mean, I've worked with clients where we've developed some amazing tools to help them drive profitability and predict profitability. And then finance would solve the problem they had, and then operations would take it going forward. Like, well, that's a great tool. We'll use it now. And then finance didn't, because they were used to going, I got to close the books, and then I do my reports, and then so it really is driving a cultural change, and it has to be thinking through. In their space, very fortunate to be able to do that. But other companies, we have to think through, like, how are we going to drive that change and drive adoption?
Real quick, let's move into some of the discussion about maybe some of the use cases. Specifically, like, you're taking on a lot of prototypes early. I think there's 14 different use cases you're starting with out of the gate. A lot of our clients may think about starting with 1 or 2. Lucid is not an organization that moves slow. So you're taking on 14. I'm really curious about, have you taken on these early prototypes and demos, have there been any of them in particular that have generated kind of the strongest excitement internally, and why is that?
Sure. We didn't plan for 14. It just so happened to be 14. We actually started with our pain points, and pain points in terms of what's stopping us from, delivering that growth, supporting that growth, or scaling the finance organization to deliver that growth. And there were very critical areas that we could clearly identify and needed to be addressed. Some of those the use cases that you mentioned about, there are actually few of them that are worth mentioning. One of them being demand forecasting.
They're all worth mentioning, by the way.
Actually, you're right, because they all address the pain points. But demand forecasting, actually, all of them are super important. Demand forecasting, I'll talk a little bit about that, because I've had experience with the building an AI model even almost like a decade ago with Berkeley students, and we used some random forest sort of algorithms, and the compute and the resources were so limited that you could only use finite files, finite attributes, and finite files, and it would take like days to just refresh the model. Fast forward like 15 years, especially 2025, I think the resources are now changing and they're available at a much more sort of larger speeds. So that the turnaround, the speed has become very critical for us, which helps faster decision making. So demand forecasting is one that I would talk about more in detail as we go through this session. The other one is investor analyst dashboard, if you will. What it does is it not only talks about the investing, the whole investor holdings, but also the positions that some of the investors are taking in terms of sell or put options against. And what it demonstrates, there are some, let's say, groups that are investing against their own sister companies. And why would one do that? And that is reducing the volatility of our stock prices that can be leveraged for a lot more sort of proof points. And I think that has been a significant use case. I mean, there's more, I know all of them are important. You want to talk a little bit about?
Not specifically, but we've worked on these POCs across treasury, accounting, finance, internal audit. There are a number of examples where we're going to drive efficiencies, improve accuracy, and speed things up. I think those are the important talking points. We will continue to leverage this technology, and as Aditya pointed out earlier, we're not experts. We're learning as we go. This is a journey, and the fortunate thing is, like you mentioned, our C-suite is on board and empowering us to do this, which is important.
I would also add the orchestration layer, right? So we just put that in place last week for Lucid, so it's early stages, but the goal is it's never about the agents themselves, it's about the outcomes that the agents deliver. And in a multi-agent environment, you need a common orchestration layer to be able to provide safeguard, guardrails, policy adherence, agent to agent, lanes for them to work together across workflows and be able to produce results. So one of the things, like we're at reInvent, the great news, what we put in place is Agent OS, which is built and provided by PwC, but it's native to AWS, embedded with Bedrock. It works with all the integration points that you need. And as we bring agents online, they work with one another. And that's the goal, right? You're not going to have 10 agents. You're going to have hundreds of agents over time.
It's a great point. Thanks for. We're going to continue to unpack that one a little bit more. So
Yeah.
Let's talk about that one. You shared a travel story. We're all passionate travelers up here. We were able to align on that. You shared a story about using ChatGPT around travel. It was really good because we were talking about how this journey, like there's things on this journey that have surprised you about how it's reshaping the impact, the day-to-day impact on finance. And I thought you shared a great example. Do you mind kind of unpacking that for us again?
Sure. So I just came back from India and I was sharing a story this morning with Adam. But so I went to India, I went to Jaipur, and I asked ChatGPT, hey, give me an itinerary for 3 days as a tourist. It, very nicely gave me a page itinerary for 3 days and say, hit this spot, hit this spot, hit this spot. So, okay, great. Then I said, well, I'm traveling with older parents, so give me a revised version of the chat. It just said, just go slow. I said, okay, great. That's helpful. What it didn't do was when I spoke and when I got there, I met the locals over there, and they actually told me exactly what to do. And which shops to hit, what to do from one location to another location, take like the 3-wheeler or the 2-wheeler or what have you, right? Do not go to these restaurants. So there's a lot of things that were there that needed to be, that I learned from the locals. This is the parallel I draw from, the work we're doing on the agentic AI side. I think a lot of the work gets leveraged through an automated way. The machine can learn, but there will always be, at least in my experience so far using these models, has been that there will be a human touch, which almost is similar to the locals in a city, to provide that business context. We know our business the best, and it's very unique for us, so we have to provide that relevant experience or data points for those models to work. And the efficiencies of those models will only improve over time. Just like Waymo took 10 years to build an autonomous car. Well, we just started the journey right now, and I'm not saying we'll take 10 years, but at least it's going to take time for it to be perfect. But we see a world, as you said, like, hey, what are some of the learnings over here? We see a world that where AI is augmenting the work that finance team is doing and not replacing them completely. Second, I think the finance team now has much more speed and bandwidth to focus on business insights, to be truly a thought leader as well as business strategic business partner, and then drive more data-based decision making. So I would say that this is where I feel like the learnings have been immense. We're constantly improving our models, the accuracy of the models, and that's a journey, as I think we'll call it out.
I mean, we talked about it earlier. The more we enable technology to any degree, automation, the agentic journey, orchestration, the more human we need to be as leaders, right? So it's not just the freeing our time up for strategy, it's the reasonableness. You still have hallucinations in a lot of the models that cannot be relied on for every business decision out there. It's more than just a starting point, because even the progress that we've made in the last, I feel like the last 12 months has changed all of the functions across most of our companies. But that means that us as leaders have to the empathy that we need to show up with. We talked a little bit earlier, the people part of this, I've never seen a moment, and I've been doing this now for too long, I think 33 years, I've never seen a moment where the uncertainty, because of the potential impact on jobs, because of the potential impact on your children's ability to pursue careers that exist today, that uncertainty has led to just a lot of angst. One of the things that we're rolling out, I wasn't going to mention this, but now that I'm thinking about it, we've invested a lot to roll out a program in 2026 where we're doing all the upskilling that everybody else is doing, and I think we're actually ahead in terms of disrupting our own business, but we're putting a lot of money toward, I think it's 15 points around a human-centered circle in terms of, and it's not just empathy, it's coaching through uncertainty, it's coaching when technology changes workflows on a very real-time basis. So the skills that we have are a lot of things that we were taught kind of early on in terms of being kind and helping bring people along for the journey. I think it's more important than ever.
No, absolutely, and I would add to that, it will require us to rescale. At least in the finance organization, I can talk about that. It's not just going to be about reporting numbers and doing the reconciliations. It's going to be about, how do we leverage the tool we have and, be more strategic about it. And I think it's the right way. I draw an analogy from like when we used to do mental math, and then calculators were introduced. Everybody thought, oh my God, my job's going to be gone. Well, it just enhanced your productivity. Well, AI is going to take that to, maybe 10x or 50x fold in terms of enhancing productivity. But you will need, some level of touch, human touch in there, and humans and the workforce will have to be retrained, knowing how to leverage this technology. And maybe I'll also mention about the demand forecasting tool that we are. I'll dive a little bit deeper into that, because in my experience, demand forecasting generally is, I've seen at least in 3 of my sort of experiences, is one of the most popular ways, because very often the CFOs, the CEOs want to know what their revenue is going to be, either for next month, next quarter, next year, or next 5 years, And the trigger for revenue is for them to know what their demand is going to look like. And, you can build price elasticity, demand curves, and whatnot. So far, up until now, we were able to take internal factors. We could do some sort of basic trend level analysis and look at, hey, we have these existing products, this is going to scale this way, and this, expect this kind of sort of GDP is growing X, inflation going Y, assume sort of some level of growth over there. What we've done, I think, with this sort of agentic model is to be able to combine and correlate both the external and the internal factors in one sort of platform. And the external factors are also not just about, you can take CPI, GDP growth. For us, it's gas prices. Some are lagging indicators, but some are leading indicators. So drop in gas prices negatively impacts EV. Increase in gas prices positively impacts. So those are sort of leading indicators. Interest rate drops. That sort of, those are correlations you can make through leading and lagging. You match that against, incentives and discounts and pricing offers that we're giving, in addition to the order taker rate, the pipeline that we have, and you build multiple sort of models, statistical models layer on top of that, and be able to run those scenarios in a fraction of a second, I think that's breakthrough technology. That's what I think will give us the competitive edge. To give you an example, I think you mentioned about hallucination. The EV credits were taken away in September 30th. The models assumed that this event happens every September 30th. Well, this is where the humans come into play. They say, no, this is a one-time event, one-time activity. Maybe the demand has accelerated. Maybe, October, November, December is going to look very different. So those are the things. This is exactly similar to COVID period. Right out of COVID, nobody knew how the demand is going to shape out. And everybody planned for the worst, and we ended up being in supply chain crisis. So I would say there's that element that will always be there.
That makes a ton of sense. But for the record, 0 to 60 in under 2 seconds and 400 plus miles of range, that's the only indicator I needed. I'm in.
We compromise nothing.
That's right. Well done. Maybe let's pivot a little bit to the technology discussion a little bit more. Laura, you started to take us there. Maybe we spend a few more minutes on that. Will, I'd love to get you to weigh in a little bit as well. There's a lot of organizations that we work with that maybe they adopt packaged finance solutions. There's a lot of solutions out there for finance professionals. We've talked about RPA and the role that it can play in accelerating value creation for finance teams, but you guys have chose to be on the leading edge. So what was it that convinced you that an agentic approach powered by AWS was a compelling path to go on?
For us, it boiled down to we knew we had access to data. We learned that after engaging PwC, and they showed us that as a finance organization, you have so much more data than you are familiar with. Yes, of course, we run on SAP, and so we're intimately familiar with that, but there was a ton of wealth on Redshift that the PwC brought to our attention that unlocked a lot of value for us. And as that conversation grew, we became more interested in agentic, and now the solutions that we've developed have really proven that if you can unlock that data that is captured all throughout the company, not just within finance. We're leveraging data from Salesforce and other platforms. That's really empowering us to build solutions that add a lot of value for finance.
Fantastic. Lori or Brad, anything you want to jump in on there?
I always go broader. I look at it as when the wave of investments came for cloud and cloud infrastructure. At that moment in time, you're spending a lot of time on your technology architecture to make sure that the pipes work, to make sure you're thinking about it in a way where the total cost of ownership makes sense for the company. The shift now oftentimes has been, I think in 2023 and 2024, definitely you had a lot of companies that were experimenting. There were a lot of pilots that were going on even through 25. I think the word purposeful and disciplined, become really important when you talk about agentic, because it's not just the use cases. The use cases are really important because they're your path to drive an outcome. But what's equally important is making sure that the new architecture makes sense so that you're gaining access, the integration points are there to data across the business, potentially in most cases data that far exceeds anything that you've ever had access to. But you also have the scalability and the performance long term. I always look at the economics associated with it. So if you think about GPUs, and it's hard to look at the news without a conversation in terms of semiconductor industry and supply chain challenges and the like. You've got to be really smart in terms of how you build the journey, because there's only so much capacity that's going to be available, at least in the near term. And so for that, one of the things that we've been doing with clients is what needs to run on a large language model versus what might be able to run on a edge solution, and starting to architect different technologies or different solutions dependent upon the workflow. I think that's going to be really important in the coming months and years because we will have capacity challenges based on the energy that's going to be required in order to run what we think is going to be a massive change for all of the companies that are represented in this room.
Fantastic. I think, again, moving at the speed that you're moving. I think it's important maybe for the audience, like this wasn't, this project that we're discussing out of the gate, like this wasn't a 2-year project to enable agentic capabilities, right? Like this was 10 weeks, something like that, right? Like what is it that allows you to move that fast? Is it a particular technology? Is it your organization? I'd love to think it was your partners, but what is it that helped?
It's also our partners. It's our org. It's our culture. We move at a really quick, fast pace. And I always joke with people when I'm interviewing them is they have to be comfortable with not knowing what they're going to do tomorrow. As an example, I did not know I'd be on this stage when I woke up this morning. But that's the pace we work at. And I've been with EV startups for 8 years. It's been like that every single year. It's constantly changing. We're developing. We're trying to disrupt a very old industry, and we're using cutting-edge technology. And so the pace, I cannot emphasize enough, is extremely fast, and you have to be able to adapt with that quickly. And if you can, you'll catch on to things like this.
I think the other thing just to add, though, is when we're talking about the technology is that, finance professionals have been doing their role for a long time, and they don't really understand the capabilities that are being unlocked. And so the battle that I always run into with clients is getting them to think differently. Like, how do I, like, for instance, if we think about, I close the books on a monthly basis. I do my accruals on a monthly basis. Why? I mean, we could automate and do a lot of that stuff daily. We can start to go to a continuous close. There's all these things that we've just got to make I'd say one is educate the finance professionals around what is the capabilities today. And then 2, encourage them and support them in thinking about what are the other things I can dream up? What are the things that we can try to do? And then a culture that supports it, such that when he said, hey, we take a leap of faith, that's so critical.
Yeah, and I would just add to that, I think as Will said, I think the speed is important, but I think the exec sponsorship, alignment, leadership sort of, support is super critical for any such projects to be successful. And once you get that, I think you have to move very quickly. And you have to iterate fast. You have to fail fast, if you will. And learn and adapt and tweak models. It'll never be perfect because that will just take time. And I would say adjust those models and make it if it's 80% there, I think it's a good start, and you keep iterating on that.
In order to keep moving at that speed, we often talk about the importance of governance, specifically in the finance function, right? And governance takes many forms, whether it's the organizational structure, the people governance, or whether it's what the technology enables us to do. We've talked a lot at the reInvent this year, talking about automated reasoning as part of Agent Core and things like that. We're excited. You guys are implementing some of those things. Maybe give us some thoughts on just the governance, controls, responsible portion of the discussion, specifically because we're talking about finance. It's critical.
It's not just finance. It really is a collaboration across so many teams. I can tell you, being on this project, I've worked with and have now become very, very close to a number of different teams that I did not know existed prior to this project. Cybersecurity, infrastructures, internal audit, you name it, everyone had to get involved and align on what needs to happen in order to enable this. And so once you get that cross-functional alignment, I think it's much more feasible.
And I think, IT, we have a dedicated AI team understanding, laying out the architecture and the cost sort of economics of it, as Lori mentioned. but weekly check-ins, making sure that, you unblock all your barriers in a very sort of methodical and timely way. And of course, security is super important over here. I mean, we're talking about AI, but we also want to make sure our models are safe and good for use.
He's joking. He said weekly check-ins. There were 8 a.m. calls every day. So it was not weekly, it was daily.
There was only so many weeks. It was. I mean, you guys are moving so quickly. Daily seems appropriate. Lori, how does this line up with?
Yeah, I also see, like, sometimes I'm surprised. Like, I'll get on a call and see a demo of something that we've built with customers. It's interesting because it's different dependent upon what a company wants to spend money on. And so I'd love to think we shape that, but oftentimes we're on the receiving end of what a company is willing to do and when they're willing to do it and how fast they're willing to do it. In this particular case, it's been fun for everybody because of the pace. May not always feel that way, but the outcome has been there because you're seeing things in action faster than we ever have. But I was on a call a couple weeks ago, and one of my teams was walking me through what I would consider, if there's internal auditors in the room, then forgive me, but what I would consider to be kind of mundane work in terms of controls testing that you have to do on a regular basis, and it's rotating and still sample sizes and all that good stuff. We took something that used to take 20 days to test down to, they were telling me it was 2 minutes, and they said our goal is that it's going to be less than 20 seconds, and that's what we're working on right now with the right kind of guardrails and and making sure the reasonableness checks are there as well. You get to do a larger population in a very short amount of time, which frees up internal auditors to think about where the risks are in the business and help the company protect against malicious intent, of which unfortunately that's going up as well.
Maybe if you can just continue that thought, think about the next 12 months, 2 years. What are our clients expecting in their finance organization and more broadly? And then I'd love to hear, like, specifically to Lucid, like, what are you guys thinking about? You did this so quickly. 12 months seems like an eternity at the speed you move.
I mean, on most days, I don't think we're moving fast enough. So I think every single function needs a backlog, and what you did in 10 weeks, to me, that's the new model. You're going to be running sprints, and you're going to be working through that backlog, and you're going to iterate on solutions that you may have built in the first 10 weeks are going to seem archaic 18 months from now, not even 18 months from now. I think, one, we try and avoid lock-in. So most enterprises have multiple models that are available to them, some of which are for economics, others are for kind of purposeful intent in terms of the outcome that you're trying to deliver. I think that's going to be important. It is a race, so it depends on the technology providers as well in terms of who continues to evolve the fastest in a way that is going to be meaningful for your business across certain functions. The technology is moving quickly, and I think just as much we've got to think through. I love the discussion on growth because oftentimes AI is talked about as a cost lever. So how do you drive more efficiency? How do you potentially reduce headcount? That's not what it's about. It's unlocking capacity, and it's unlocking a growth strategy that's not available today for most companies because they do have a cap on headcount and they do have a cap on capacity. That's the part that's exciting to me.
Yeah, and I think for Lucid, as you call that, it's pretty much in line with that in terms of speed is going to be super critical, and understanding the ability to adapt to market conditions, changing market conditions, and providing real-time analytics and predictive analytics or insights with data-based decision making. In terms of finance, I believe will become a catalyst for growth because as I mentioned earlier, it will unlock a lot of data that generally is connected. When everything flows into a financial system, it is flowing from multiple systems, and there's a potential to unlock a lot of value in terms of providing valuable business insight. Third, I think it also will lay down the foundation for us for finance organization to be a competitive edge in the things that I talked about. And lastly, I would say, like, the finance organization will truly be a strategic business partner. They would think of them more as like the locals in that story that I just mentioned. They would be considered as locals, knowing their domain, their expertise, their sort of area, and be able to provide that business context, valuable business context to those stakeholders, important and critical for decision making at every level.
I mean, you're setting the pace with finance, which I don't get to say that very often. Usually, I can't say in most organizations, finance is setting a pace around AI. So kudos there, right? But with that in mind, like, where do you see the next transformation taking place? Like, is this going to spill over into factory ops and supply chain? Like, where is this headed?
For Lucid specifically, we've just started on this journey, and we have as I think Laurie mentioned, there's a backlog of items that once you see the art of possible, every team raises their hand and they'll say, like, oh, I should be doing this, I should be doing that. I see factory operations in terms of, like, factory production. We manufacture our own cars, in United States, and so constraints around that, supply chain constraints. We ran into a lot of, like, critical parts like magnets and things like that, where supplier health and things like that, where that's another wave of sort of complexity that we will navigate through. And above all, I also think, I don't know what voice will do in terms of AI capability. That's another transformational sort of cross point that I'm looking forward to, and which might even further disrupt some of the work we're doing over here.
Yeah, I think we're seeing speech-to-speech models in particular becoming very powerful and transformative. So that's a good call out. Maybe I'll throw this one out to anybody. We touched on it a little bit, but this is the human plus AI element to the conversation. Lori, I think you started to unpack. This is about more, not shaving down through efficiency, particularly with the steep growth that's projected for the Lucid team. Like, how are we seeing that come together, both maybe at Lucid or even more broadly?
I mean, I think about it from a perspective of what is going to differentiate finance people going forward is their ability to integrate with the technology and the AI. And I've said it a few times, I just feel really strongly about it, and that's where it really around thinking differently around how they do their jobs. And so it's how can I be more impactful? How can I identify more value for the company? How can I send better signals to operations? All of these things, which today, a lot of times old school finance organizations are really looking at, they're reporting backward. Like, how did we do last quarter? How are we going against plan? What is the difference? But they're not saying, what are those levers that are driving the changes, and figure out how I change it. So I look and I go, oh, I gave an EPS estimate of X. I'm going to be 7% lower. How do I use AI to model out different scenarios of different behaviors to be able to see, can I close that gap? What levers can I pull? What things can I do? And it's the combination of the two which is really going to drive value. And so when folks think about, oh, there's the risk of efficiencies that could impact my role, I think about it a little differently in the fact that it's the combination of the two that can really provide the value for the financial professional going forward, and they can bring that insight that just technology can't, right? They know how to put those things together and really differentiate themselves.
The other element, and we're seeing it, we just did a benchmarking exercise for a few of our clients. You want to look at the past, you want to be able to scenario plan for the future, you want to look at your peer set, you want to look at best in class. Oftentimes that took a long time to do. And I think that it goes back to speed. If you can ask a large language model very quickly to take a look through the Ks and the Qs and the analyst reports and the like in terms of what are the growth levers that are out there that may impact my business faster. And am I missing something on my cost structure associated with and the formulas that I use in terms of the mix of CapEx and OpEx and the like? I think that's where the creativity gets unlocked. Like for too long, there's a lot of jobs that have become, it's not that they're transactional, but there's a lot of time spent on the workflow itself. And it doesn't allow for, that's why if you've slept 8 hours a night or 7 or 8 hours a night, which we should be doing, and you wake up, they say, do your hardest task first, right? We're all tired when we do when we're trying to unlock that creativity. Oftentimes we're on the other end of being very tired with everything that's going on in our lives. If we can simplify how we get the information in our hands and the right information to actually unlock how the business should be performing, that's what, to your point in terms of being a strategic partner to the business, I think that's going to be the difference.
Yeah, I mean, at Lucid, we do see a world with AI as sort of augmenting the finance team, and especially, to drive the growth in a more sustainable and a cost-efficient way. Yeah.
Yeah, makes a ton of sense. I know we're getting close on time, so I just want to.
I think it's happy hour for a lot of people.
Is it? It's happy hour for me always. Let's talk about one last good question. I'd like to just go down and let you guys give some quick thoughts. A lot of people maybe in the room or elsewhere are thinking about how they get on the journey or what this journey might look like for them. All of you have practical experience doing this in sometimes many forms, in an accelerated form, particularly at Lucid. You got to have some practical advice based on the lessons learned even out of the gate. If you can think of just one thing that you might want to share with people who are considering going down a similar journey, what would that one thing that you might share with them? I don't think there's a wrong answer here, so no pressure.
You want to start?
I would say move quickly, move fast. This space is changing, but first get the executive sponsorship and alignment ASAP, and then prioritize. I mean, identify your pain points and make sure you're prioritizing, because you won't be able to address every single sort of use case over there. So based on your sort of, priority, move quickly.
I would just add, make it personal. One of the key learnings I have is everyone's afraid of change. And when we're talking about data, there's a lot of security concerns. But when I would set up meetings or talk with the people who were hesitant to allow this or enable it, they were on board. We just had to make that human connection and make sure that everyone was on the same page. And once they were, whether it be internal audit or anyone else, they were like, oh, okay, sure, no problem. I understand now. And so just make sure you check that box and not just try to pass it, because it takes time. It does require conversation and what have you. But once you unlock that, it really will help.
And Will, you mentioned it earlier. I think you've got to be comfortable waking up tomorrow that your job is changing. I always look at it's an interesting moment. I was talking to my adult kids. Like, you got to lean in, right? Like, the people that are not leaning, if you are in a white collar job and you are not leaning into AI, that's a mistake. Your job will not exist as it does today. So one of the things as leaders in the room, as individuals, and as mentors to the people that are around us, we have no choice but to be a role model in terms of understanding the technology, thinking through use cases, thinking through how fast can I disrupt the business, and thinking about how to unlock creativity that can improve the growth strategy associated with the companies.
I have a really quick story to add on that. At the very beginning of the project, I took a flight. I was in the aisle seat. I could see the gentleman, his laptop screen across from me. And I knew it from 30 seconds in, I knew he was in finance, because he has a spreadsheet with tables, and the tables have like red and green. And he's capturing it on a snapshot, and then he flips over to PowerPoint, pastes it on the slide, expands it, and then starts writing bullet points to accompany the tables. And I just thought to myself, and I went back at the team knows I said this, I know that guy's going to be a dinosaur if he doesn't change the way he works. I knew exactly what he was doing. He didn't have to say anything. I just saw his screen. I was familiar with it. I've done it for decades. And knowing that he's still operating like that, it has to change or he's going to get passed by.
Which
Last thing I would add is finding those people in the organization that can help be the change agents and think big. You know, I think about, I've done a lot of work with airlines, and you know, one of the issues that this airline had was that they were way over on budget on crew labor, and so it was a finance issue, and we started deconstructing it, working through it. I spoke to the head of flight ops the other day, and they'll save $200 million this year based upon developing a tool to figure out the forecast, which then led to, we can schedule different, we can align crew different, we can, and then they just start taking it forward and forward. And you need those people in the organization that are willing to challenge those norms, because that's where the real value is going to be, not just in the efficiencies. It's what can we do operationally different, what insights can we get, et cetera.
I was just going to add to Will's comment, like I think one of the use cases we have is exactly to leverage some of our board decks and our sort of slidewares to be able to populate exactly not just the data, but also the commentary. There is a executive dashboard that has been, as a use case, been created, which will, based on the user, whether it's a CEO, it's a different use case, and whether it's a CFO, a different use case, whether it's a finance leader, it's a different use case. But they get sort of the commentary on a daily basis. It's not like a Tableau dashboard, but they get all the metrics with the commentary, and it allows them to sort of navigate and have almost conversational analytics. Okay, here are your red areas. Here are your pinpoints. Tell me what's going on over there. Why is it this way? Why has the ASP gone down? Or what, which area? What triggered that sort of headwind and whatnot? So I mean, back to your point, as you said, like we're already doing that. So it's a good call out.
The context that it provides is critical, right? Like we could spend a whole nother session on context. I just want to say thank you to the panelists. It's a refreshing conversation. It's a little bit different than a lot of the conversations that we have at reInvent. So thank you for just investing the time, sharing your expertise. I want to say thank you for just the opportunity to be your partner on this journey. We're truly honored. And then for everyone, audience, and up here, just wishing you a fantastic remainder of your reInvent. Thank you for spending time with us.